Hey everyone, thanks for joining us. We have a fun little session planned today where we'll discuss how you can build loyalty with Gen Z at your credit union. My name is Jackson Noss. I'm on the sales ops team here at RAZR. Just two quick notes before we jump into the webinar. It is being recorded and we'll send you a copy of the recording afterwards. And if you have any questions during the session, please feel free to drop them into the questions tab in the bottom right-hand corner of your screens. Now, I'd like to introduce today's host, Ryan Smith. Ryan leads the business development at RAZR, where he partners with credit unions to transform loyalty programs into genuine member relationships. He brings deep expertise in loyalty strategy, member experience, and implementation. As a member of the Gen Z generation himself, Ryan is positioned to share perspectives and actionable strategies that go beyond points to build lasting value and keep members of his generation coming back. With that, I'll hand it over to Ryan.
Yeah, thanks, Jackson. Glad I can kick things off. So to start, before we dive into the how, the strategies and tactics to attract and retain Gen Z customers or members, we wanted to start with the why. So the why is this demographic, so crucial for the future of financial institutions. This graph here paints a pretty clear picture based on what the key motivators are for focusing on Gen Z. As you can see, the number one reason by a significant margin is that Gen Z represents a growing market. A full 67.9% of these institutions see this as an important factor, and for over 38% of them, it's the most important reason. This isn't just about today, it's about securing your institution's future relevance and growth. Following that, almost half the institutions, 47.9%, recognize that their deposits will grow over time. While they might be starting with smaller balances now, their earning potential and financial needs will expand significantly in the coming years. Capturing them early means growing with them. Beyond these top two, we also see other compelling factors. Nearly 37% acknowledge the potential for high brand loyalty with Gen Z if engaged correctly. Over a third see the value in their high connectivity, which can organically lead to more members through word of mouth and digital influence. And for many, especially credit unions, there's a belief that Gen Z's values can align well with their mission-driven approach. So the data underscores a clear imperative, understanding and actively pursuing Gen Z is no longer a nice to have, it's a strategic necessity. Today, we'll explore that unique characteristics of this generation, what they look for in a financial partner, and how you can position your institution to becoming their provider of choice. So to start things off, we'll transition to understanding the Gen Z preferences. So let's start by looking at the stacked bar chart on the left. This chart visualizes the annual average growth in real personal consumption expenditures by generation, projecting from 2022 out to 2035. What it shows us in the generational shift in economic power. So notice how the orange segment representing Gen Z starts relatively small in 2022, accounting for about 4% of consumption expenditure growth. However, as we move towards 2030 and especially 2035, their share dramatically increases to 23%. Even more striking is the emergence of Gen Alpha above them, also in orange, reaching 15% by 2030 and 23% by 2035. These younger generations are poised to represent a significant portion of future economic activity. This isn't just about their spending power now, but their future earning and spending potential as they mature and enter their prime earning years. So you can see that Gen Z is projected to have a staggering 17% annual average growth in their real personal consumption expenditures. Compare that to millennials at 3%, Gen X at 1%, and boomers actually declining at minus 5%. This 17% isn't just a number, it represents a rapidly expanding financial footprint. For credit unions, this translates into enormous potential for new members, new accounts, loans, and overall engagement. If we're not actively reaching out and building relationships with Gen Z now, we're missing out on the fastest growing segment of consumers who will soon dominate the economic landscape. The takeaway from both charts here is clear. Gen Z is not just a future demographic, but they are an increasingly powerful economic force today and will be a dominant one in the very near future. Their rising economic influence means that for credit unions to thrive and remain relevant, attracting and serving Gen Z is not an option, but a strategic imperative. The rest of our discussions today will focus on how we can effectively do this by understanding their unique needs, behaviors, and financial priorities. So let's get right to the core issue. The bold 30% on the left reveals a critical problem. Nearly 1/3 of Gen Z doesn't even know what a credit union membership is an option. This isn't about them choosing their institution. It's a fundamental lack of awareness. They are simply aren't considering us because they don't know we exist as an alternative. This unfamiliarity stems directly from the fact that traditional outreach methods have failed to reach them where they are. Our reliance on older communication channels isn't resonating with Gen Z who consume information and interact differently. We aren't showing up in their digital spaces or speaking their language, which is why they aren't engaging. So this all ties back to the age data on the right. While the average American is 38 and a half years old, our average credit union member is 53. This age gap is a clear symptom of our low penetration among younger demographics. Less than 20% of Americans under 40 are members compared to nearly 50% of those over 50. This means our existing membership base, while valued, isn't being adequately replenished. So ultimately, our biggest hurdle with that is that Gen Z isn't competition from big banks, but this basic awareness problem. To ensure our long-term vitality, we must bridge the gap. This slide underscores that our strategic imperative is to adapt our outreach and grow relationships with Gen Z to ensure credit unions remain relevant for the future. So when it comes to everyday banking tasks, a dominant 55% prefer using a mobile app. This isn't surprising, but it underscores the need for feature-rich mobile experience. For learning about banking products, while digital channels are strong, 23% still prefer in-branch interaction. This tells us that while they live digitally, there's a significant segment that values a physical presence for education and understanding. Finally, and perhaps the most important when dealing with financial issue, over half of Gen Z prefers to do this in person. This is a powerful insight. Despite their digital fluency in complex or sensitive financial matters, they still value the personal human touch that credit unions are renowned for. This preference is a direct advantage for us, offering a unique opportunity to build deep trust and relationships. So what do these channel preferences tell us about Gen Z's broader expectations? Well, first is clear, Gen Z expects a seamless app-based banking. For them, mobile banking isn't a convenience, it's the default. If our apps aren't intuitive, fast, and comprehensive, we're already falling short of their baseline expectation. They manage so much of their lives on their phones, from social to shopping, and their banking needs to fit seamlessly into that digital ecosystem. This leads me to my next point. Younger members are significantly more likely to understand mobile app functionality. They are the digital natives. So they've grown up with smartphones in their hands. They expect sophisticated features, quick navigation, and modern user interface. We don't need to teach them how to use a mobile app. We need to provide one of them that meets functionality and high standards, and is also meant to be designed with digital fluency in mind. And finally, a crucial operational point is if you're upgrading your online banking platform, communicate those changes. Whether it's online banking, your mobile app, any kind of change, even improvements, it needs to be clearly, proactively communicated. Gen Z values transparency and a smooth experience. Inform them of updates, explain new features, and provide support. This builds trust and reinforces that you're evolving to meet their needs. All right. So our first bullet point hits it directly. Credit unions, communities, they're not shareholders. That mission resonates with Gen Z. Unlike traditional banks driven by profit for investors, credit unions are member-owned and community-focused. Every decision is made to benefit their members and the local community. This fundamental difference aligns perfectly and Gen Z with their desire for authentically and purpose from the organizations they engage with. So these statistics truly emphasize this. A significant 77% of Gen Z prefer brands that prioritize sustainability. They care about the planet and ethical practices. Furthermore, another 60% expect companies to take stand on key social causes. This generation isn't just looking for a financial service, they're looking for a partner whose values mirror their own. They want to put their money where their morals are, and they use their spending power to support organizations that demonstrate a positive impact on the world around them. Lastly, credit unions have a natural advantage. Here, our core mission is to serve communities, not shareholders. This resonates deeply with Gen Z, who expects brands to prioritize sustainability and take a stand on social causes. To leverage this, we must actively tell our authentic impact story. Show, don't just tell. How we reinvest locally and support our communities. Share short videos and engaging content on social media showcasing our volunteering and ethical practices. Highlight transparently how we put members first. By doing this, we move beyond just financial services and become a trusted partner that aligns with Gen Z's desire for positive social impact. So now I'm going to go over Gen Z's pain points. So let's connect these behaviors to their pain points as shown in the bar chart on the right. This asks, what would stop you using a product or service? And these Gen Z's answers in orange. Notice the top three, poorly mobile design features. This directly echoes their mobile first expectation. A clunky, slow, or unintuitive app is a major turnoff. Slow online chat response for sales issues. While they love digital, they also expect immediate support. If they have a question or problem, they want it resolved quickly through their preferred channels. Preferred features, responsiveness on social media. This highlights their expectations for brands to be active and responsive on the platform where they spend most of their time. Social media isn't just for marketing, it's a customer service channel for them. Even customer service only on the phone and store, 12%, it indicates a preference for flexibility that we know from previous slides. They still value in person for complex issues. So on the left, we can see behavioral insights, first with digital overload and trust. Gen Z typically juggles 6 to 8 financial apps on average. This means they are comfortable in navigating a complex digital ecosystem, but also they are looking for simplicity and trustworthiness in their financial tools. For us, this implies a need to be central, reliable hub for their financial lives. Second, their mobile-first expectations. They expect instantaneous, frictionless interactions like tap-to-pay and one-click auto payments. This isn't a nice-to-have, it's their standard for convenience, efficiency, and managing their money. And finally, tight margins. Many Gen Z individuals are dealing with high living costs, such as like student loans and insurance. This means they often manage tight budgets, make every dollar count, and are highly sensitive to fees or inefficient processes that waste their time and money. So these pain points are crucial opportunities for credit unions. By providing intuitive mobile experience, offering rapid digital support, being responsive on social media, while combining that with our renowned in-person service for complex needs, we can differentiate ourselves. Addressing these issues is key to not just attracting, but also retaining this financial savvy yet dynamic, demanding generation. So keep going on the pain points. Building our understanding of Gen Z's financial behaviors, this slide introduces two more crucial insights: their desire for financial guidance and their sensitivity to fees. So let's look at this left on the slide. The large 53% is a really significant number. It tells us that 53% of retail banking consumers in the United States look to their financial institution for guidance. What's even more noteworthy is that this is at 4 percentage points more than just a year ago. This indicates a growing appetite across all consumers, including Gen Z, for trusted advice from their financial providers. This isn't just about transactions anymore. People, especially younger generations navigating a complex financial landscape, are seeking partners who can help them with budgeting, saving, understanding credit, investing, and planning for the future. This represents a huge opportunity for credit unions to step into the role of a financial advisor and educator, reinforcing our member-centric mission. Now, let's look at the right side, where we see data on the likelihood of changing credit unions due to fee. This is a critical pain point, especially for younger members. The bar chart shows a clear generational divide, with 31% of members under 40 state that they probably will or definitely will switch credit unions in the next 12 months, specifically because of a fee. Compare that to 25% of members aged 40 and older. So this 6 percentage points difference for younger members is substantial. Gen Z, as we discussed, often operates on tight margins, so fees hit them harder and are a major deterrent. They are less tolerant of what they perceive as unfair or unexpected charges. This data confirms that fee sensitivity is a key factor in retention, especially for the younger demographic we are trying to attract and keep. Ensuring transparency in fees and offering low or no fee options is a paramount to our success with this generation. So let's tie it all together with enterprise rewards and loyalty. On this slide, we're going to be covering 4 essential strategies that financial institutions need to master to engage Gen Z in a digital-first world. So let's walk through each of these strategies. So the first, personalization. Gen Z expects relevant, seamless experiences every time they interact with a brand. This means using data like transaction history or social media engagement to offer truly tailored experiences. For example, if a Gen Z member frequently buys coffee on weekends, send them a specific coffee-related offer Friday afternoon. When your content is relevant to them, it builds loyalty. This is about delivering the right message at the right moment, avoiding generic emails or irrelevant offers. Next, we got smart payment reminders. We know from our pain points that Gen Z often juggles multiple apps and manages tight budgets. Helping them remember payment due dates is a key. Almost half of Gen Z forgets payment due dates, and nearly 1/3 never receives a payment reminder. Don't just ping them, offer smart top-down reminders. One tap and they're done. This is simple convenience, dramatically reduces late payments and builds trust. Third, a seamless mobile experience. Your mobile app isn't just a digital brochure. It needs to be a financial empowerment tool. It needs functions like fast fraud checks and balanced viewing. Gen Z expects AI-driven budget recommendations and real-time alerts. They want to know immediately if they are over budget or close to hitting their monthly limit. Financial institutions can show features like savings goal trackers. For example, hey, like with a message saying like, hey, you're $15 away from your emergency fund goal. Click here to move $15 from your checking. So finally, micro-learning and financial literacy. Gen Z doesn't sign up for long webinars on budgeting. They want short, engaging content on platforms like TikTok and YouTube. Think about short bursts of entertainment and education. Financial literacy can't be slick and pricey. It needs to be 15 to 20 seconds of content. For example, you can release a video on how to build credit with just $50 spend, or 3 steps to save $100 a month using your app. You need to be the brand that jumps in, unlisted, and embedded into their daily digital feeds. Now that we've armed ourselves with digital experience fundamentals, let's dive into designing a loyalty program that Gen Z loves. They crave rewards that are instant and personalized. So first, the core concept, Gen Z craves personalized instant rewards. Generic programs are out. If you're still saying earn 1 point per dollar spent without context, you won't be competitive. Gen Z wants something that's tailored to them, and they want it now. This is underscored by the statistic on the slide. 59% Gen Z say they want rewards programs tailored to them. This isn't just about points, it's about being seen and valued. This leads us to micro rewards for micro actions. Gen Z's attention span is short. If you want to drive everyday financial behaviors like logging in to check balances or setting up autopay, give them a small ding of points immediately. For example, 5 points for logging in today, 10 points for enabling autopay, 20 points when they hit a weekly savings milestone. These micro rewards add up and keep them engaged and also reinforce positive habits. Because the reward is immediate, it's intangible, which fuels their motivation to keep using the app. This ties to the next point being mobile notification preference. A full 59% tell us that give me the reward that feels personalized to me. Nearly half of Gen Z wants offers pushed via mobile notifications, not email or direct mail. So assume push is your default channel. Mobile notifications and even lock screen notifications get the best open rates by far. But use them sparingly. No one really wants spam. So when you combine tailored rewards with timely push notifications, you get a powerful double whammy. Gen Z feels recognized and they're more likely to click through and engage. So here we'll cover the structural bones for Gen Z friendly loyalty programs. We'll talk about tiered points, in-app redemption, and gamification elements that will get them hooked. So first, tiered points for easy entry and VIP style upgrades. Don't make it all or nothing. Give them a clear pathway to join, but also show how they can level up. Your basic tier might be 1 point per transaction, but after hitting 500 points, they unlock the silver status, meaning better redemption rates or an exclusive digital badge. Gen Z loves progress bars, badges, and visual markers of achievement. Let them see the notification that says you're 80% of the way there to gold status. That sense of momentum drives repeat behavior and engagement. So next, we'll go over omni-channel redemption directly inside your app. If they earn points, they should be able to redeem them instantly in the same place. Don't force them to call customer service or go to a separate portal. The ideal flow is simple. Earn points, then tap on the Open Rewards tab in the app, and then tap Redeem. From there, choose from a carousel of coupons, gift cards, fee waivers, or cashback. All done in 3 taps. Anything that slows them down, like kicking them to an external website, kills the momentum. Keep it seamless and mobile first. So finally, gamification badges like social sharing, interactive challenges. Gamification isn't just bells and whistles. It's a powerful engagement lever. Issue badges for accomplishments like Credit Builder Bronze for the first 30 days of on-time payments, or like a Budget Master for 3 consecutive months under a set budget. Host interactive challenges such as like save $50 of savings in a week, earn 100 bonus points, or refer a friend and both of you get like 200 points. Make it fun, competitive, and shareable. This makes financial habits feel less like chores and more like achievements, driving deeper engagement with your credit union. So let's talk about the most non-negotiable expectation for Gen Z, which is instant gratification. If your program makes them wait 6 months to see a reward, they've already clicked away. Long-term points accrual systems feel archaic to Gen Z. They grew up with leaderboard updates in real time, so delayed rewards are deal breakers. Focus on instant gratification. If you can trigger a cashback deposit into their app or wallet within minutes of purchase, you've created a powerful positive loop. Or offer a quick discount code they can redeem right away in your app. Like scan this code at checkout and get 10% off your next coffee purchase. So next point being fast rewards build trust and repeat engagement. Instant gratification isn't just about that little dopamine hit. It's about providing what you can deliver on your promise. When rewards pop up immediately, Gen Z thinks, okay, this institution has modern infrastructure. They understand me. That trust encourages them to keep using your products. This creates a positive cycle. The faster they get something, the more likely they are to engage again, which fuels additional data you can use to personalize even further. The redemption path must be frictionless. Keep redemption fully mobile within the app. They tap, choose from a rotating selection of instant offers, and see discounts applied in real time. Mobile redemptions can also be digital gift cards or promo codes that drop straight into their Apple Wallet or Google Pay. No printing, no in-branch visits, make it effortless. Now we focus to community and social engagement. For Gen Z, purpose and social responsibility aren't in the fine print. They're a requirement. If you tap into that, you'll foster loyalty beyond just transactions. So first, credit unions can lead with community. Gen Z wants brands to stand for something. They want to see their credit union actively supporting causes they care about within the community. Offer incentives for volunteering, like complete 2 volunteer shifts at a local food bank, then upload your proof for 250 points. That links financial behavior to social impact, and every time you demonstrate your mission, you reinforce your brand values. Gen Z will share these expectations on social media, and that organic word of mouth is priceless. Next, our hyper-local focus is think global, act local. While global issues are important, Gen Z lives in a hyper-local world. They want to see immediate neighborhood impact. Promote partnerships with local businesses. For example, shop at Joe's Coffee this weekend, scan your card, and you get 5+ points to support your favorite local coffee shop. Showcase local charity gives you an app feed. For example, you can send out a campaign that matches donations to the local homeless shelter. The more you embed your rewards and engagement around community-specific initiatives, the stronger the brand loyalty. Don't just say you care, show up in person, in-app, and in their neighborhood. So where does RAZR fit in this journey? So let's start with how Gen Z thinks and acts. They're digital natives who expect interactions to be seamless, intuitive, and mobile. RAZR is built on a behavioral science, meaning it doesn't just reward actions, it nudges smarter behaviors in real time. And because it's mobile first, your rewards program lives right where Gen Z already spends hours of each day on their phones. This critical part is why you want to drive adoption and long-term loyalty. So second, Gen Z doesn't just want rewards, they want to be engaged. RAZR makes this possible by gamifying the experience. So think badges for savings, social challenges that create shareable moments, and streaks that build healthy financial habits. You can apply your credit union's custom branding to everything, so you identify as something that is front and center. And through personalized SMS or email notifications, members feel seen and valued, not just part of a generic loyalty program. So rewards that resonate. Choice is a non-negotiable for Gen Z. RAZR delivers over 200 gift card options, flexible cashback, event access, travel perks, and even a Best Buy rewards catalog. What sets RAZR apart is you can tailor a custom reward store with local businesses, sports teams, or even a branded credit union merchandise, turning your rewards into community connectors. And for Gen Z members who are cause-driven, RAZR supports charitable donation storefronts, aligning with rewards with their values. And lastly, scalable and insight-driven. Back-end flexibility matters just as much as front-end expectations. RAZR gives your team a real-time insight into member behavior and makes it easy to fine-tune and improve and impact campaigns. And with the seamless integration and enterprise-grade security, it's built to scale alongside your credit union's growth. So ultimately, RAZR turns your digital banking touchpoints into a true loyalty engine. It doesn't just reward transactions, it drives engagement, advocacies, and long-term connection. And everything that aligns with Gen Z's top priorities: personalization, speed, and real-world impact. RAZR isn't just a rewards platform, it's how you build loyalty with the next generation of members. Thanks.
Thanks, Ryan. That was awesome. Pretty cool to see how important the Gen Z generation is currently and is going to become in the next couple of years for financial institutions. So awesome. If you guys have any other questions or want to reach out and get into contact with us, please visit our website, razrhq.com, and check out our Contact Us page, or email Ryan directly. His contact information is on the screen there. Just want to say thanks again for joining us. We really appreciate you guys attending these sessions and hope you find them useful. Look forward to seeing you guys at our future webinars. Thanks. Take care, everyone.